Hey, everybody. Russ Bates here. Welcome back to the Clean Energy Edge podcast. Today, we're digging into how carbon markets and energy markets are colliding and what that means for project finance, policy, and global momentum, especially with the U.S. stepping back from the climate leadership role. Yeah, again. I'm joined by Shraddha Nair, a global expert in climate finance and carbon markets, to help us break it all down. So let's get into it. Hey, Shraddha, how are you doing today? Welcome to the Clean Energy Edge.
Hi, Russ. It's lovely to meet you again after quite many years. I'm doing very well. How are you?
I'm doing fantastic. Thanks for asking. I know we've been connected on LinkedIn and through um, a couple, at least, I think, clean energy groups.
Definitely.
So we've kept up between each other, but I don't think we've ever actually been able to talk and have a kind of a face-to-face, a virtual meeting, if you will. So this is I know we've traded I think some emails and messages and obviously that type of thing, but it's great to actually talk to you.
Absolutely. Yes. It's always nice to, talk to somebody we've been connected socially, like on social media platforms for so long. So it's nice to be here.
Absolutely, you're right. Well, can you give our audience a little bit of introduction? I know some things about you, but I'm not going to do it justice. So, can you introduce yourself and tell everybody about the important work that you're doing?
Absolutely. First of all, I'm doing important work that is music to my ears. A high point of my day is that I'm doing important work. I feel good hearing that. So I'm basically I started off my career as an electrical engineer. I did my majors in renewable energy, so that is where I got the spark of having the clean energy sector and the whole thing about how we are transitioning away from fossil fuels into clean energy. I was back in India, worked there for a few years, and then moved to the UK. I'm currently based in London for my master's, and I did that for a year, and for the past almost 3 years, I've been working as a senior sustainability consultant at Johnson& Townsend as my day job. Yeah, I'm focused mostly around decarbonizing built environment and also focusing a lot around RECs and PPA and helping a lot of our clients to achieve their net zero targets and help develop those strategies and plans to either offset emissions or reduce their carbon emissions.
Yeah, that's the name of the game, right? Reduction of CO2, which we'll probably talk about a little bit. Things are a bit different here in the U.S. Than they were 6, 8 months ago. Whole different story, but I guess
Absolutely.
the kind of punchline is across the globe, but this is not slowing down. Um, can you talk a little bit about what you're seeing there in Europe with carbon reduction?
Yeah. Well, I should say that, the past couple of months, the geopolitical changes that have been happening, I'm going to put it that way, everybody knows what we're talking about, is has definitely impacted the way sustainability or carbon reduction has been perceived in the Europe as well. But if you were to keep aside the last 6 to 8 months, I feel like up until the top end of this year, Europe has been, let's say, a role model in terms of the policy initiatives or the incentives and any other form of carbon taxes or trading schemes that Europe has introduced. And a lot of the organizations whose headquarters are, global headquarters are based in Europe, they have seen significant pressure in terms of their net zero targets and how they should align their organizational targets in line with the, let's say, the science-based initiatives or other reporting standards that we have seen in the market. So I'm going to say it's pretty strong head-on happening, especially in the European region. But I think we'll discuss a little bit more about other parts of the world as well in this podcast. Yeah.
Yeah, I agree, and that's interesting stuff, especially again considering what we're running into here in the U.S. And, a bit of I guess the foundation, if we can set that, carbon markets and how they relate with the energy markets. That's something that you're into quite a bit. Can you help us understand how those are connected and why that, I guess, a nexus of those two is so important in what we're going through today?
Absolutely. This is something I also realized a few months ago, that I've always felt that, because I've been in the industry for just under 7 years, so I can see what was there in the last 10, 20 years. And carbon markets is something I genuinely thought is very new, in terms of concept. And but it has been around for almost 20, 25 years, I should say. And I've met so many uh, people working in UNFCCC, or other organizations who have been in this industry for 20 years, and I'm surprised to see that, because the whole concept of, let's say, carbon removals or carbon offsetting, all these big jargons that we have in the carbon markets, has gained momentum in the last half a decade or so, or last decade. Um, when we talk about the nexus between energy markets and carbon markets, it's a little bit of a touch and go, because you're looking at it from two perspectives when you talk about energy markets. One is development of clean energy technology, which means that you need funds for that. You need finance to develop all the new clean technologies that's coming up into the market. And where does that money come from? So we use carbon markets as a financial mechanism, or a financial market, if you want to call it, where you use it as a tool to incentivize and bring out the money, the taxes that we collect as form of carbon tax or emissions trading scheme. All that money ideally should be directed towards mitigation, adaptation, and clean technology. Um, that's one angle to look at it. And the other one would be where we are talking specifically about electricity markets when it comes to energy markets. And when you say electricity markets, it's more around, okay, how is this again? When we talk about carbon markets, people look at it from a very, very money perspective, which is good and bad, because we want to monetize a ton of CO2. That is where, carbon pricing is considered as a financial tool. And all that money that's being generated from the carbon markets eventually will be used to incentivize the let's say, the LCOE, or the levelized cost of electricity for clean energy. Let's say offshore wind. So you use part of that money you've gotten from your carbon markets, or the revenue generated from that, and use it to incentivize either the development of clean technology or the electricity markets, where clean energy is being fed into the grid. So I realize I've just given too much information here, so maybe we can unpack that slowly. But yeah,
Yeah,
that's where I look at it when you say next between carbon and energy.
yeah, they're really tied together, right? One kind of depends on the other.
Yeah.
Um, and if I can simplify it, if I'm understanding correctly, it's really where whoever's consuming electricity, if they don't have a solar on-site solar array, for example, or maybe wind or whatever, and they're pulling off of the traditional electric grid, which has electricity being generated, maybe it's through fossil fuel plants, right? The carbon credits are a way for them to offset what they're consuming, even if they can't produce electricity on their particular site. Is that kind of where it comes together?
Yeah, yeah. Broadly speaking, yes, absolutely. Because when you're looking at carbon markets, it's not just the pricing element or pricing mechanism of it that is usually set by governments, or federal states. Um, it's mostly around how you can use some of these carbon taxes to buy or sell carbon credits for offsetting your own emissions. And it could be at any level, national, local, global level, or even at an organizational level. Yeah.
Yeah, the goal to eliminate the fossil fuel, the CO2 emission from basically electricity generation and the consumption. So now that makes a lot of sense. Are you seeing how carbon pricing it's actually shifting how energy is generated? Is it really doing what it's intended to do through what you've been seeing so far?
That's a very good question because I've in the past few months I've attended quite many summits and conferences around carbon markets. Specifically, that was my focus for this year. And one thing that I've realized is this is the ideology, the ideal theory that what I believe should have been the nexus between energy and carbon markets. But the huge gap that we are seeing in the market right now is that carbon markets in itself is very standalone right now, even though the theoretical idea behind it is that you need to generate a revenue or income out of it. Um, Carbon markets is very small and very, let's say, it has increased exponentially, but it has also stagnated in the last year or so. And it's going to pick up again. But I feel like the ideal theory that I was talking about, that is the disintegration between carbon markets and energy markets right now, because there's a lot of clean technology that is being developed. There is, we are connecting our offshore wind farms or solar farms to the grid. Everything is happening parallelly, but still there is a gap that I've seen in the markets. And that's because the funds, or the income that we really want, that should have been generated from the carbon markets, is not necessarily being allocated properly to, to incentivize the development of clean technology. So that's a huge gap that we have seen in the market, right? Yeah.
Is that gap, you say it's closing as the I'll say the financial markets are kind of starting to understand how this works, and more funds, more capital is available to do these projects that is so important to actually have the generation from clean energy sources take place?
Yes and no, because we see a lot of people are pouring in funds for clean technology development, but whether or not it's a direct investment that they want to do, because the technology segment, the clean energy technology sector is booming. It's been fast. It has always been fast, and it's still progressing really quick. But the carbon markets is very, like I said, it's quite small and slow. And while technically speaking, for example, if you take an organization and if they have grid electricity that they are connecting to, which is done on fossil fuels, let's say, and if they were to reduce their scope 2 emissions, or their emissions from their grid, they would prefer to buy, let's say, RECs, which I see a lot of companies
Yep.
in US doing.
Yep.
They buy RECs, they invest in PPAs, power purchase agreements, or they buy energy attribute certificates. And when you see that aspect of it, again, the funds are then going towards, trying to offset their emissions from the grid electricity using either additionality, using PPAs, or something else, which again, that disconnect, when you see those are not carbon market tools or financial instruments. When they want to when they want to avoid or offset their hard to abate carbon, their emissions, the company's emissions, that is when they are looking towards carbon markets.
Okay.
Then they go and buy carbon credits. It could be credits from a mangrove field, or it could be credits from a methane reduction program in Bangladesh. It could be any form of carbon reduction projects. And that money that they're putting in is just offsetting their emissions. It's not creating additionality. It is not, that money is just used to offset or buy the credits that is liable to them in the form of emissions. But that in money eventually is not going towards, let's say, developing a new wind farm. But that being said, I've seen a lot of projects, renewable energy projects, that have also made their way into the carbon markets, which is a positive outlook, if you want to say. And I personally feel that in the next 12 to 24 months, we will see that shift of the quality of the projects that can produce good carbon credits, moving from not just nature or biodiversity type of projects, it will also move towards renewable energy projects, which is where the more renewable energy projects come onto carbon markets, the smaller that gap keeps getting, if that makes sense.
Yeah, no, I got it. That makes a lot of sense. Well, let me ask you this too. In Europe, or I guess any part of the world right now, is this more of a voluntary thing where, say, companies are, wanting to be net zero or have certain, CO2 reduction goals? Is it still pretty much, yeah, we'll do it, but we don't have to do it type of scenario?
Yeah, it is actually. There are two angles of carbon markets, and one is definitely the PCMs, which is the voluntary carbon markets, where companies do everything voluntarily, which is great. That is where the money is genuinely coming from. And then you have national or regional level in programs like the EU ETS, which is the European Union Emissions Trading Scheme, or we also have the Carbon Border Adjustment Mechanism, CBAM. So those are some incentives, some initiatives that was developed by the European Union, and that is focusing very much on a sector basis rather than looking at it from a company perspective. So it's applicable to, people who are exporting or people who are importing steel, aluminium, electricity, hydrogen, and there's one more sector I'm missing out. Um, from outside Europe, that is basically the idea is that if they are importing some of these hard to abate or very carbon intensive materials in their supply chain, let's say steel, for example, if they are, if a company based in Europe is trying to import it from somewhere in Hong Kong or I don't know, Australia or South America or even South Africa, they will have to end up paying a form of carbon tax. That that is, something that's on a regional level and not at a very organizational level. So it's yeah, there are two angles of how we are going about carbon
So if
markets
it's
in the region.
Yeah, so if it's something being imported from outside the EU, if I'm understanding correctly, they may be, depending on what it is, they may be subject to a carbon tax where the carbon markets would come into play. Internal in the EU, it's more voluntary.
Yeah, absolutely, yes.
Okay.
And that it's mostly to improve and encourage, localization of your supply chain so that you start buying stuff that is required in your value chain locally within Europe. So it might be at a higher cost, but when people start doing the cost benefit analysis of, let's say, buying something from Hong Kong or getting it imported from there and then paying a carbon tax on it. Um, so again, it depends on organization. So if it's, let's say, a normal services-based company where they don't have a lot of supply chain going outside of Europe, they can start disclosing and doing everything on a voluntary basis. So, but let's say if it's a manufacturing company, they will have to do a reporting stand. There are some reporting standards which are now mandatory for companies with higher turnover revenue, but for some others, it's straight up voluntary.
It sounds to me there's a lot of talk of tariffs right now in the U.S.
Yeah.
And it kind of sounds to me, and correct me if I'm wrong, but it kind of sounds to me like it's a little bit of I'll call it a green tariff on certain things for the EU. And we're just talking about the EU as an example. So, it could be different with other parts of the globe. But no, okay, that makes a lot of sense. And I mean, do you think there's momentum to shift where there's more of that, both like talking about the EU, more of carbon taxes inside the European Union and other parts of the world, or is it not quite getting to that point yet?
I think within the European Union, definitely. Um, I don't think internally there's going to be a tax. Let's put it that way. But
And let
anything,
me ask you why, whenever, sorry to interrupt, but whenever you say you don't think internally there will be a tax within the EU, why is that? Do you think that companies are already moving in that direction on their own, so there's not that need? Is that kind of where it's at?
I think because European Union is usually they consider themselves as one single unit. So all the regulations around carbon markets or energy markets, there are like 39 countries, I think. Please don't hold me to this. I think there are about those many countries part of the European Union, and they all are so small countries, and their standalone economy is just not enough to, act as one standalone unit of, let's say, tax. But when they're all together, European Union is considered as one, and then um, that's how the tax systems are, especially around the carbon markets, and if you want to call it as a green tariff, work in that way. So within European Union, then the countries will have to start dividing, their import export tariffs. But usually there's a free trade agreement within the European Union. So
Got it. No, okay, that makes sense. It sounds like there's movement, there's momentum in Europe for this, and they're actually kind of I'll say encouraging other countries that want to do business in the European Union to do this same type of thing with the carbon intensive types of products, I guess. That sound about right?
yeah, that sounds about right, because the organizations who are based very specifically within the European region, and I'm including UK here, although we had the whole Brexit that happened and UK is not part of EU, but then when I say Europe, I'm somewhere smudging together UK as well.
Well, let me ask you this too. Here in the US, so we're recording this on what is today, July 7th. So just a few days ago, there was legislation passed that really they're taking a chainsaw to clean energy incentives, some things that came in place not even 3 years ago through the
Yeah.
previous administration. Um, the U.S. has also pulled again out of the Paris Agreement. Um, so let me ask, from I'll say the global perspective, what does that mean when a country like the U.S. is basically going, I would say, in the opposite direction with, looking to penalize and push down clean energy? They were even talking about in this legislation that was passed. It's not in there now, but they were wanting to give additional subsidies and types of things for fossil fuels. There's a drill, baby drill, all of this type of stuff. What is there much of an impact with what the U.S. is doing with the rest of the world, or is like in the UK and other places that you're talking to folks across the globe, are they saying, "Hey, all right, the U.S. Now we've got more we have to do," and that's really disappointing that America's not going to pull their weight in this really important, I'll say, battle against climate change?
Um, yes and no. Yes, in the sense that obviously because US is quite a large economy, and a lot of other countries, especially emerging countries, are dependent on the aids or the funds that come from US. When you look at it from that perspective, those companies, because I personally feel that since the change in presidency, the main aim of USA has been that we want to be careful where we are putting our money, where we are investing, who we are giving the money to. That is what the goal has been in the last half year, let's say. And in terms of sustainability or development of clean energy, that sector, I genuinely feel that companies have just slowed down a little bit because of the recent changes, but they've not really veered away from what their overarching sustainability goals are, for companies especially. And countries, they are not stopping either, they're like, we will continue. I mean, because I personally feel, and I keep saying this to everybody who's in this sector, it's not like sustainability is a premium version of buying a Gucci bag. It's like it's it's business as usual now. You have to start considering the impacts and the emissions of your supply chain, move towards a little bit greener version of what your current operations are. I think that's a message every organization that I work with is continuing to hold strong. And a lot of the companies, especially global companies, who have operations in the United States of America, they have changed their narratives, obviously, because there are regulations around, what you can say, what you cannot say, and what kind of technologies you can use. But in other parts of the world where they have their operations, they still continue to, do what's best in line with their corporate sustainability strategy, which I feel like is positive to see people not really being impacted that much. But touch wood, I don't want anything to happen and lose my own job. So
Yeah, it sounds a bit like I guess folks maybe tap the brakes a little bit, trying to figure out, all right, what's going on in the U.S. and how will what happens there, which they, w- I guess we kind of know now since they signed this in, but previous to the bill being signed into law, people wondering, okay, what's going to happen in the United States and how will that affect stuff? I guess since they know now, they can take the foot off the brake a little bit and make the adjustments that they need to in other parts of the world. So, I mean, do you think investors, from their point of view, that anything happening here in the U.S. would build or kind of what we're seeing now, maybe erode confidence in the carbon markets? Or do you think once kind of the dust settles, they just move forward and again just pivot as needed?
I think the latter for sure, because everybody's just waiting for the dust to settle, to be honest. And a lot of the carbon markets, the money coming into the carbon markets is usually done by companies or countries which that are developed, and a lot of the supply end of the carbon market is Southeast Asian countries or South American countries, where there's a lot of carbon reduction projects, whether it's nature or biodiversity. So um, the flow of money coming into carbon markets is going to be impacted a little depending on where or how companies want to put their money in. Um, but I feel like with this whole thing of, and I'm quite curious. I know this is a bit of a tangent, but I'm quite curious that you mentioned the bill, and yeah, everybody has been shook up by the bill. But a few weeks ago, maybe I also um read California's SB 253 and 261 bill, which is which I was very surprised by. I know that there have been so basically, the bill was talking about, companies with a certain turnover and who have operations in California need to start disclosing their reporting measures and their emissions. And I feel like, if you have, and obviously California has so many companies out there, operations in California. So, um, irrespective of what the federal bill says, and correct me if I'm wrong, I know that the uh, states can have their separate rules and regulations, which companies will have to abide by in the USA. And when I saw that, I was like, well, that's great. I know that the other bill kind of put a damper on people's dreams about of reducing, their carbon emissions. But then there are states like California or Massachusetts who are focused very much on building that clean energy environment and bringing that into the economy. So I'm
Yeah.
both positive and yeah, not positive, not negative. Let's see what happens.
Yeah, with regards to the bill, there's a lot of sad folks in the clean energy sector and that are working in the United States that they're scared. Um, Not sure what the future is going to be for them, especially in the residential sector. That's cut out at the end of this year. So homeowners aren't going to be able to take advantage of those tax incentives. So the residential sector is like 35% of our overall electricity consumption here in the US. So it's 35%. And that's going to come, I think, to a bit of a standstill, which is terrible. I mean, that sucks. That sucks all the way around. Um, Other projects are still going to have the flexibility, basically till the end of 2027. And there's some fine print to get into, but instead of going through the end of the decade and a little past, it's going to be shut down much earlier as far as these tax incentives. But the big problem is, and I had a post that went a little bit viral talking about this. Actually, I have another podcast panel coming up in a couple days about this. uh, Whenever you think of supply and demand, because that's what electricity is, you either have a lot of electricity, a lot of electrons on the grid, you don't have much consumption, or it's even, or what we're going to see is there's so much more consumption with data centers, with AI, things like that. And you're going to have these projects, these clean energy projects, which are the fastest to deploy and get on the grid and put those electrons on there. You're going to have a big shortage, and we've already got a shortage, and electricity consumption's not leveling it out. It's not dropping, it's going up. So point being, I really see that the clean energy is still going to be able to do what we want it to do. This is definitely hurts the industry. It I won't say it kills, but man, it's a pretty bad wound to the residential market with regards to clean energy. But as prices continue to go up, and they will for electricity, there's still a path for clean energy, and really, it's going to be the only path. Fossil fuel plants take too long to come online. The turbines for those are those are 3 to 5 years out. Nuclear plants, forget it. The last one they just finished up in Georgia took 10, it was over 10 years, and it was billions and billions of dollars over budget. So, it's got its own problems with the nuclear sector, but yeah, clean energy is really going to be the lifeline for, avoiding rolling brownouts, blackouts, and increased electricity costs for those that are going to take advantage of it.
Absolutely. I personally feel like money always finds its way into um into the economy. This is this was something one of I know a very old book about a very famous economist 50, 60 years ago. I read that money always finds its way into the economy. And I know that this new bill has put a dent on residential market, like you said. But I think it's about how the uh, state governments can try to support in whichever way possible, let's say to the developers of the market rather than the residents itself. I know the whole incentivization market is just plucked out and thrown into the ocean. But I personally feel like if I was selling solar panels, let's say, to a particular residential segment of the society, I would try my best that for me to sell it without them getting the incentivization from the government, how can I? This is where insurance and brokers, everyone comes into picture, you know. How can you how can you reduce risk and liability and yet ensure that the market is equipped for clean energy technology, you know,
Yeah.
without the incentives and without the policies backing. So this is where people need to get a little bit more creative and yeah, that's the only way to enable markets at this point.
Yeah, I agree. You know, the markets will decide, and the scales can be tipped one way or another. I know in the U.S. they're tipped very heavily towards fossil fuels. You know, they're still getting, I guess, for the past 100+ years, subsidies and help from the government, but nobody really talks about it. It's just normal, right? But clean energy tax incentives, that's, oh my gosh, they can't make it without that. So a lot of misinformation and a lot of disinformation out there as well. But you're right. I mean, the market is going to ultimately decide. Um,
Yeah.
well, before we wrap up, where can people follow you or connect or reach out if they want to learn more or maybe get some help from you?
Oh yeah. Well, I'm predominantly on LinkedIn. I think that that has become our new Instagram or TikTok for everybody who wants to, you know, get their mojo back on in the professional industry. So LinkedIn for sure. They can just reach out to me. If you can't find my name, the user ID is just my first name, my last name, and the number one. So it should be easy to find the right Shraddha. And I'm also on Instagram. It's called Your Voice for the Planet, but that's very touch and go if people want to follow there, but definitely on LinkedIn, yes.
Yeah, and anybody can reach out to me. I'm pretty easy to find, and we're connected on there too. So I think they search you up. It'll probably won't take them long to come up with get your profile and send you a message or whatever. So um, really appreciate the time and the knowledge. And I think we're probably going to want to reconnect here in 12, 18 months and see what's happened. Because lots of things have changed in the last 12 or 18 months. I think we're going to see a lot more changes. Um, Hopefully for the better here in the U.S. But we got our work cut out for us in the clean energy sector. So I'm inspired by what's happening there in other parts of the world. So I want to thank you so much for your work and for coming on the Clean Energy Edge.
Thanks so much for having me, Raz. I really hope that we can connect in a few months' time and see how the markets have changed.
Yeah, it's definitely exciting. So again, thanks so much, and everybody subscribe, hit the alert bell. We're on YouTube, we're on Spotify, Amazon Music, Apple Podcasts. We're everywhere that you want to find great podcast. All right, so we appreciate the support. We'll talk to you on the next one. Thanks.